Hi, you all. All right, so here's the video I promised. I had some trouble getting this streaming software to work, but was able to do that. I just wanted to make good on my promise to do this little video for you all. So ja, goeiemorgen voor allemaal daar in Zuid-Afrika. En ja, we hebben het gaan goed met jullie. But I'm just going to switch back to English. So just so you know, I am proudly South African, but wanted to make this video as per the conversation earlier today. It's a little bit later than I promised, but I can do probably about 20 minutes before I have to head to bed. I got a couple things coming up early in the morning, so I'm going to cover the most relevant subjects as it pertains to this lesson, and it's just going to give you a basic outline, and then here's what I usually do, right? So I learned myself, I learned on my own, like basically everything I needed in order to ask the right questions regarding to trading. So what I'm basically saying is YouTube and Google is your best friend. You know, any question you would have for me after you watch this, you can go on YouTube and say something, for instance, how to install Coinbase Pro, and it will show you everything. In fact, I'll discuss it. You know, it's included if you have Coinbase, the app. But basically, you can put all that stuff in YouTube. And if you don't know how to use YouTube, or you don't know how to locate YouTube on your browser, which is this top part right here on your URL field, right here where my cursor is right now, then you can just go on google.com and you can type in YouTube videos and then your question. You know, YouTube videos, how to install Coinbase Pro. And then you'll see it's going to prompt you that you don't have to install it. It's web-based. So it's included if you have Coinbase. Coinbase is a wallet. It's like Valor, except Coinbase is the largest wallet and the most respected wallet in the industry, but it also has an exchange. The same with Binance US. You'll see it says US here, but in South Africa, I also have a Binance account. I cannot access that account in the States, however, so I'm going to use this one, but it works the same. So you'll just get different tax information that you can submit to SARS, South African Revenue Service. So basically, just to jump right into it here for y'all, there's a couple things I want to cover. And, you know, I had someone on the conversation here earlier that asked a few questions. So I just wanted to go over here, and then I'm just going to cover it as it goes. So, okay. So first of all, we will cover basic indicators, right? And then I saw here he was asking about the 21 EMA, cool, so I can go over that, and resistance levels. So, you know, the different charts that you would use and how to get started. So, again, how to get started. There's a lot. You know, it's not just like installing an app on your phone, but how to get started. You can literally go put that in YouTube, and you're going to see videos that's going to take you step by step. We don't have enough time here, and I want to be respectful of your morning. Most of you people are working, so you know, I don't want to take up too much of your time, but just to give you a really good overview. But basically, you know, when you put in how to get started on Coinbase, that's going to give you, like, that's a more specific question you can put in on YouTube, and you'll get a step-by-step explanation, or you can say step-by-step how to get started on Coinbase. So Coinbase is a wallet, Binance has a wallet, but then these wallets are so established that they have exchanges, and in the exchanges you can trade way more advanced than you can on just Coinbase on your app on your phone. However, you'll see on Coinbase, for instance, there's line charts. So just to show you, and the line charts are helpful for people who want to trade long term, you know. So if you're like, okay, well, Bitcoin's at $37,000 right now, I'm just going to hold until it's 100,000. Then line charts are ample, you know, it's enough to work with. And then I will also answer the question about levels. So there's two different things you will do on a chart pertaining to levels and price action areas, and that is trend lines and also your normal levels. So you'll see how it respects right there. Right there was some resistance when it pushes in and it can't break, but it breaks or it has a false breakout. That's a resistance level. Now, when it comes back up, it breaks through and it breaks back down. But once it goes there and it holds above, you see how it just goes up, and then once it hits there again, it stays there. Now this becomes support. So that's just a little bit on trend lines and the jargon, the wording people use. Now, if you look at these upward trend lines, it's pretty simple. When it goes up and it breaks through, it usually goes down. When it trends downwards and it can break up, it usually trends up. And that's how you can use these charts. Now, this is called candlestick chart, okay? So again, you can go on YouTube and say, how do I understand candlestick charts? When it's green, it goes up. When it's red, it goes down. And then this is a volume chart. So usually when you see the volume starts ramping, this was really hard to say because you just didn't see it coming. However, there is a way to see it coming. And you do that by looking at the flags. So we're going to talk about bull flags as well. That's a very good strategy on cryptocurrency that I've noticed for my own personal trading that works. So there's bull flags. Then it looks like you see this flag stick and then the little flag. So think of a golf course. You're on the green and you've got the pole and then the flag. So this isn't quite a bull flag, but since it has the trend that's supposed to break down, when it shoots right up through there, this level would be a good place to get in. But if you don't get in like after it broke through this level, it's risky. So then you won't have a chance to get in until it either breaks down, pulls back, and goes back up. So this, for instance, you see how this is the pole flag? It's inverted. The pole flag is now going, instead of coming up and then making the flag, it goes down and it makes a flag. Beautiful flag, but this is called a bear flag. So in short, bull, think of a bull that puts his horns upwards to kind of like hit, right? So it's like upwards, it's bullish. Bears slap, so it slaps downwards, it's bearish. So if someone says something is bullish, it means they are long bias. They are betting that it's going up. If they're bearish, they are bearish biased, so they're betting that it's going down. How to short, now again, you get long and short. How to short cryptocurrency, since you can't short it, you can just sell your position and wait till it gets to the point where a short person would cover his or her position and then buy in again. And at this point, it would be a really good support. And at this point, this is usually where I would buy, but I would buy with less size in case it comes back to this level. You see how it respects there. You can see these levels. You'll get used to it. It's called chart vision. So you can see how it supports you. So I would take half say I have $1,000. I would take $500 and put it right there. And if it did break down here, I put the other $500 in, and then your cost average would come around here. So it can get very technical. Like I said, you could do your due diligence on those things. But I just wanted to make this pretty quick. So first of all, to talk about the different platforms you can use. So first of all, how to get started, and you can go check it out on YouTube, but I just wanted to make it basic for you. There is two applications that is very well respected and are used by most professional traders. So, and I'm going to cover that for you, but I just wanted to show you. The line charts will look like this. This is a line chart. See, it's just lines that jots down the closing price at the close of the price. It makes it like a data point that it jots down, and then when it gets to the next data point, it jots it down, and then there are time frames on these charts, and we'll cover that. So these are for people who aren't day trading it. They're not day trading. They're just buying it for long hold. And you can see how this level, it just has a bunch of support in this level. So right there, I mean, with if you know what you're doing and you can see various things come together, you can. This is a place where one would usually buy and then probably sell around here, or if you're just gonna hold it until kingdom come, that's where you buy, and then you would sell it around there. And this is just an example of a line chart. So just to start with the first thing, okay? First of all, the applications, the software that you would use. So the software that I respect and I use in the cryptocurrency sector is Coinbase and Binance. And you'll see it looks like this on the phone app, Coinbase wallet. And I can leave a link for y'all if you wanted to get a referral bonus. I think it's $10, and then you'll get $10. So, I'll also get $10. We'll both get compensated, but that way you can get a little bit of something to start with. And you see it'll look like this, and this is your wallet. So you can buy and sell on your wallet, but the fees are very high. That is why we use Coinbase, but not the wallet. We use Coinbase Pro. And if you have a Coinbase account, the wallet, you just use the same login and it'll pop right in. You can look at your portfolio right there, and you can see what you have in your portfolio, what your amounts are. You can look at the orders for, say Bitcoin, because we're on BTC right now, Bitcoin USD, or it's going to be Bitcoin ZAR in South Africa. So then you just click on orders and you can see what you bought and sold. But you can see, look, now this gets really crazy. Don't get intimidated by this, but you see these numbers? This is interesting. This is called a level 2. You can see the market depth. You can see right at this point, there's someone selling about 1 Bitcoin right there. So let's say I wanted to buy, I would buy into that guy. But then you get what we call limit and market. So let's say I wanted to buy limit. I would look at that guy and say, cool, limit. Now you see how the price reflects here? Look how it changes when I click on it. This is a limit buy order. So you click on it and then you say, I want to buy 1.5 Bitcoin, and that will cost you $58,000. But look at the fees, $196 to buy this. If you do it on the Coinbase wallet, it would cost you 2.4% of this amount. It's a lot of money. But this is 0.002, I believe, percent. Very cool. So it's worth learning how to use Coinbase Pro. You can go on YouTube. There's great tutorials on it. But I just want to get to the basic questions that were asked. Now, the same as Bitcoin Pro, there's Binance. So you can use Binance in the same thing. You could go to trade, markets. You can see basic, advanced, OTC, but market. Click on that, and now you can see all the markets here. Now, I like Binance because you can buy Ripple, and they haven't delisted it like Coinbase did. So I can go click on XRP. It's just a white background instead of a black one. And it's a little more advanced, but I like this because you see these little curly stuff right here. It's called moving averages. And that's what Davi asked today about the moving averages. I believe you can change these moving averages. But I don't really mess with these. I'm going to show you how to do this on Coinbase Pro because that is where I have had the most success. And just to explain this real quick, go do research on this. What is level 2? It's the bid and the ask. This is the bid. The green is the bid, what people want to buy it at. And this is the ask. It's like an auction, always running. The ask, as people who are selling, you can either buy into the seller or you can just say, no, I don't want to get so technical. Just buy market. Say I want to buy 500 USD worth of Bitcoin, and it will show you the fee will be $175 to buy $500 worth of Bitcoin. You place your order, and then it will show you what you, I believe if I say place order, it's going to pop up. Yeah, so I don't have funds in here right now. So, yeah, you can calculate it. Probably, well, it's $500. but the amount of Bitcoin that you will get, oh, there it is, here it is. The total amount of Bitcoin you'll get is this. You'll get 0.013 and onwards Bitcoin. So cool. Now you can look at the different coins right here, right? So you click on this drop down and you can see, let's say I want to buy some XLM, which by the way made an incredible move. And then Maker also did a great 42% move. XLM 62% move. FOMO, yep. So when you click on it, it takes you to the chart. Now here's the interesting part, people. Okay, when you look at a chart, you see the 5M, 1M, 15M, 1H, etc. These are time frames. So on every time frame, there's a certain thing that applies. You have a 1 minute chart. This is usually where people day trade, because in 1 minute you'll have a resolution. But if you trade on the 5 minute chart, now every 5 minutes a new candle establishes. So it's going to take longer for these to realize. But I mean, if I buy at this level right here, you can see how it resisted, couldn't break through, and then it broke through, and now it's supporting that level. So you see how it correlates right there? Look at that. Now it's at support at this point here. Now, just a disclaimer, while I'm talking about this stuff, I'm not a professional financial advisor. I'm not licensed, so this is not financial advice. I am purely giving you this information as educational value, and to just get your brain starting, you know, to ask the right questions so you can go ahead and do due diligence. But this is not financial advice. I'm not telling anyone to buy or sell any currencies or securities or anything at that matter, but I just want to provide value on the subject. So this is the support level. Now, if I bought it right here and I went to bed, I can say, you know, buy. I mean, I have a position on, but I don't want to take it off just to buy this. But if I said buy right here, you can set a sell order. You can actually say sell, and you can set a sell order, but make sure you don't click market because it's just going to sell you. You want to click on limit and say, I want to sell this when it gets to that point. Now look at this. I'm going to click with my left mouse button. You see how the price just changed there? Again, look at this. See how it changes? You click on the level where you want to sell, and you say sell the maximum amount of XLM, which I have none of. If I had 500, it would say 500, and then sell it at that. So it'll be 207. So let's say, for instance, I bought it here, right? If I bought it at this level, well, let's say I bought it here because this is where the price is at. I bought it here, 500 shares. Then it would cost me 180 bucks. But if I click my sell order right here and I go to bed, it's 2:07 in the morning when I wake up, if it broke through on the 5 minute charts time frame. So then I would make $27, 350 rand or whatever, 200 rand. Okay, so let's say the 1 minute chart. I'm like, no, I'm a little bit more you know, impatient. I'm gonna go for it here. But if it goes at this level here, or even below this level around here, I would click on it and say, yep, let's buy it there. I put in my buy order at limit, and I would click on the limit point right there. You see how the price changed? It changes as you click on there. I put it right there, for instance, at this level, and I say, cool, buy it there. It will cost me 181 bucks, and then I would click sell it at that. So again, now $7 profit. It's silly, so I wouldn't do it. However, if you made this 50,000, when you buy it here, you'll pay $18,000, and when you sell it here, you'll make $1,000. Pretty much $1,000, I believe. Yeah, well, $800. So this is where people would buy what we call altcoins, which is alternative coins, and the profit they make, they put it right into Bitcoin at whatever price it is. If they're bullish for it to go to $100,000 or $500,000, they just stack the Bitcoin, asset. That is how people trade these markets. Now, I want to go back to the question and just start from the top here, and then I'm going to keep it super simple. First of all, Bitcoin is the most stable. Ethereum is also one of the most stable ones. I mean, it just went up 8% again last night, and therefore the banks can actually use it. So now it's got bank backing. So if we look now, you see now we have the time frames. If we look on the daily chart, I trade on the daily chart with cryptocurrency because I'm long-term bias. So in my wallet, I have my cryptocurrency just sit there because I don't need to trade it. And when you need to deposit it into the exchange, you can do a YouTube video how to send Bitcoin from Coinbase wallet to Coinbase Pro. It's instant and it's free because it's one membership. You see this level right here. You see how this thing just makes this big level and then it has this very irrational buy. And then it almost dropped right back, but then there was support here. Because there's people that are holding vast amounts of this asset, which we refer to as the whales. It's people with massive hedge funds, very deep pockets, and they buy millions of dollars worth of this. However, this thing is still, this is the point of risk. So it can drop very easily back to 20 cents. So for me, I would say take a buy order right at this point. It doesn't matter, it's just the area where you feel it would go. I would usually say around here at 21. If it's going to drop to 20 cents, I would buy it at 21 cents. So let's say there, right? Now I would say, cool, let's buy, since it's cheaper, I can get more shares. So for one Bitcoin, you'll pay almost $40,000. For $40,000, let me just do this. I'm just going to do some rough math. For 40, well, it's still not good. Let's do 17,000. For about what Bitcoin's worth right now, I can buy 170 shares of this at 21 cents. It would cost me the same as Bitcoin. Now, if I sell it, you see how it comes back here, and then it went all the way up, and then it came back, and this is now the level of support. The point of resistance. Because if it drops down and it comes back up, this is now resistance. So if I sold it there, check the price that I would pay, 36,000. I would sell it at 58,000. That's a $20,000 profit. And that is how you take altcoins to take your profit on the same price you would have paid for Bitcoin, but it's way more volatile. So you have to know what you're doing. And then you take your profit and you stack that $20,000 profit right into Bitcoin. You go back to bed. And then in December, you can sell it for 100,000 if it reaches that. So that's me trying to be funny. But yeah, so basically this is, level 2. You can go do some research on that. This is called, so let me think what I do in the stock market with this. What would I call this? So if this is the tape where you see the actual live orders posting, cool. So it just sold there. It just sold, like this is the actual prices that went through. So it's very bearish right now. They're selling into the buyers. So this is the sentiment. So this is a sentiment meter. It gives you the actual price right now, right there. And then it shows you the sentiment. There's a lot of buying happening, but you see how there's these green flashes. But let's look for these big red flashes. You'll see one right now. It's going to just flash red. That means one of the whales, are probably waiting for a ton of buyers to come in, and they just dump it on them. So that is where you have to really educate yourself on this, because there's people that are very smart that went to Oxford and Harvard and those universities, and they or they just hire a blockhouse to take $30 million and put it in blocks, So this is really good. It gives you what we call an edge when you know this type of stuff. So this is how I use Coinbase Pro. Now, I can do a video sometime where I just buy and sell some of it, and you'll see how I do it. But it's really simple. You go on YouTube and you'll see people do it. So that's the cool thing. Now, to go back to that question here this morning, right? Check this out. You see how this thing says candles? You can actually make it a line chart. You can make it a line chart. If you're more comfortable and this is less intimidating, look how nice the levels are now. You see how it went right there, and like, look at this level. It just pretty much supports there, 19 cents. You see how it's the same thing, but I would buy it at, remember, 21 cents, because I don't want to put a buy order there, but then once it goes here, all the smarter people know it's going to go there, and they start buying before you do. You want to be the first in and the first out in the market. The fastest person with the best edge wins. So, like I said, it's like an auction, right? So if you go bet, you're gonna be the one who gets that rate. So you see that this is a line chart, really cool, very simple, but you see how extended it is, and let me show you why. Because here's the overlay right here. You can see when I put the 12 and the 26, and this is to answer your question, Davi. The 21 EMA on Coinbase Pro, it's not even in here. Why? Because most people will use the 12 and 26. So there's a very interesting point to take note of. When the most traders will use the 26 and the 12, then it's the most relevant one to use, because that's where most people will make their actions based off. So if you use a 21 and they use 26, they're actually going to take their action at 12. And EMA stands for exponential moving average, which means you get SMA and EMA. SMA means simple moving average, which is after the price posted. Exponential means it takes the price and a little bit before the last price post, so it's a little bit more exponential, almost like a forecast. So it's a little bit better, in my opinion. So if you use the actual 26 as your longer term moving average to look on, to work off, and you look at the 12 to give you verification, now you've got an edge. Let me explain. You see how it's a line chart? I'm going to go back to candle charts right here. Check this out. When I go to overlay and I take the 12 away, this is how you can see. You're like, man, this looks the same. What's the difference? Well, just toggle them. If you take the 12 away, okay, cool. So that's the 12. And what's the 26? That's the 26. Toggle it back on. Now you see, okay, the 26 is right here, and this is the 12. And what the 12 is doing, if you look at the 12 right here, you see how it crosses through the 20. Because the 12, this is what an EMA and an exponential moving average, or a moving average in general, means. It plots where the chart actually jots down the price that closes, the candles. The EMA or the SMA actually jots the overall move of that price, the exponential moving average. So it takes the average over 12 candles exponentially and gives you a trajectory. Or the 26 gives you a trajectory on the moving average of the last 26 candles. So all this does is it gives you a good forecast. If you see this thing is about to cross through the bigger one, the smaller one's about to cross through the bigger one, it's about to drop. So that's what happens. And let's go to Bitcoin. I want to use a very relevant one since this is the subject we were talking about. Look at this. Now you can see the 12. Again, I'm going to toggle it on, off. If I'm not sure, okay, now I know the 12 is the top one. So the faster one, and I'm actually not going to go on the daily chart, but let's go on the 6-hour chart, because this is where the people trade. If you have a very deep pocket, you would go to the 1 minute, because now within minutes you can go and buy a coin at $37,000 and sell it in 1, 2, 3, 4. I'm just going to round it off. Let's say this is 5, 10, 15. This is not, I'm just rounding it off. 20, 25, 30 minutes. You can buy a Bitcoin, a coin at 37,000 and sell it at 37,800. So $600 profit in 30 minutes. It's not a bad day, But then look at this. Check this out. Some people say, well, I don't know where to buy. Well, it's because you don't know what you're looking at if you don't have these moving averages. The smaller one crosses through the actual bigger one. So it's actually not a bad idea to buy here, because now it crosses, you buy it. And then once you see it starts going down, you sell it here. So even if you did that, you would capture 27,500 and start selling around. When you see a drop like this, you obviously, then let's say you sold it here, that's $100 profit. If you look at the price here at the right, that's the price. So $100 profit. It's still green, but that's not very good because you want to get the most out of it. So what do we do when we want to get the most out of a trade? There are moving averages that indicates the actual trend where it's moving, and then there's the sentiment that shows you what people are doing if they're afraid or greedy. But now here comes the pro tip. Look at this consolidating bull flag, a long consolidating bull flag. See that? Now here's the big thing. This is technically an A, B, C, D pattern. So what you do is technically people will buy right when it breaks through the last high of the previous candle, but you would stop out right there below on the previous candle's low, because that means it didn't resolve. And you see what happened here? I would have stopped out right there. So it gets technical because now you have what we call risk management. You have to have a profit loss ratio, and then your percentage of accuracy will determine whether you're profitable or not. If you are accurate 50% of the time with a profit loss ratio of 3-to-1, you're going to be profitable. That's great. That's actually super cool that you can be 50% right and still make money. Why do you make money? Because here's the thing. 50% of the time you're wrong, but 50% of the time when you're right, you make 3 times what you would usually lose when you're wrong. That makes sense? Now, my accuracy currently is 68%, and I have a profit loss ratio of 4.2-to-1 to 5-to-1. So I use the 1 minute chart because I don't work with $37,000. I would not put that in this unless $37,000 was 10% of my current net worth lying around. But to get to the point on this, I use the 1 minute chart because I can get quick gains. Now look at this. Here, now it's going to come full circle. You see this level? It came here at support, and there I missed that whole move. Man, FOMO, right? Oh my goodness. Just wait till it gets back to that level. Look at that. And then put half the position on that you would have usually done, and then sell it again right there. Because look, it made it back right back there. This thing's so volatile. You guys have seen it go through the highest highs countless times. Now here's actually a good example. Look at this. You see that support? It's actually at support right now around that area. To buy a whole coin at 37,461 and then just sell it at 37,608, that could be a quick $200. Or you can just say, no, and this thing's going to 100,000. I'm just going to sell it here at 37,820. You'll probably see that at lunch. And then you can make $400. But you don't want to day trade Bitcoin like that per se, because it's so expensive. You won't get the move you want. You want to day trade the altcoins, the cheap ones. Let's look at a nice one, a cheap one, a cheapie. So this one's $3. But yeah, this one's great. XRP, let's not go there. If you did this in a South African account, to answer the other question regarding the case right now with the SEC, that's an American company that mandates American securities and assets in the financial sector. So South Africa doesn't have the SEC. So in Germany and China and Europe and those places, they're still going to buy XRP. That's how this thing went up from 22 cents to 29 cents. That is 7 cents. So let's do the math. 7 cents, right? Let's say I had $1,000 and I bought it at 22 cents. I would have gotten 4,545 shares. But now, check this out. I bought it at 22 cents. Now I'm going to sell it at, what's it at right now? 29 cents. Okay, sell it at 29.50. 29.5. So I remember I spent 1,000, but now I have 1,340. So now what I do, I take the 340, I stack it on Bitcoin, I keep day trading with 1,000. Keeping in mind that I have a profit-loss ratio. You stop out when it breaks below your point where you don't want to lose a certain amount of money. And look at that. Did you see that? That's not good. Look how it just dipped. That's a whale right there making his move. $200 just went off the price. So now let's go back to the actual 6-hour chart and see what's happening. On the 6 hours, because it's a longer time frame, it's not bearish yet. It's still holding this bottom of that candle right there. So it's not very bad yet. And the smaller moving average is still above the bigger one. So it's still bullish. So on the 1 minute chart, you would be sweating bullets. But if you had a deep pocket and you had a risk reward ratio, you would just hold. So what's a risk reward ratio? So what that means is, let's get a little creative here. A risk reward ratio is basically this. I will risk only $200 per share, okay, to make my 4-to-1 $800 per share. Okay, so let's say I had $1,000. I have 5 shots at doing that. So if I go and I say, well, I'm going to buy Ripple XRP at 22 cents and I'm going to sell it at 25 cents. Okay, that's a 3-cent move. So what I do is I say $200 divided by 0.03 is 3 cents. I need to buy 6,666 shares at 22 cents. It's going to cost me $1,466. So divided by 22 cents, there's the amount, lots of sixes, times, remember it's 22 cents, I'm selling at 25, so it's 3 cents. That's a $200 risk that I'm willing to take. So I'm actually not gonna sell 3 cents up because it's not my reward ratio. You can even do don't shoot so high. It comes with experience. Do a 2-to-1 profit loss and try to get an accuracy of 55%. That'll look great because check this out. So you will buy 6,000 shares, okay, at 22 cents. But if you want to make 2 times your risk of $200, you have to sell this at not 3 cents up, but 6 cents up, which will give you 28 cents, right? Because now if you have 6,666 times 6 cents, you make $400. So you risked $200 to make $400. And how you become accurate in your predictions is by looking at what I love, and those are the patterns. So I'm going to talk about patterns. And you don't see very clear patterns here. This is crazy on the 6-hour. But when I go on the daily chart, because I'm so long biased, let's talk about bull flags. Okay, a bull flag is the safest thing to use. It makes the flag pole and then the flag. And when it breaks the previous high, that's where people buy with your risk set there. So whatever this amount is, let's say it's 50 cents and you only want to risk $200. You say $200 divided by, $200 divided by 50 cents. You can only buy 400 shares of that stock when you stop out there if this is 50 cents. That's why the candlestick charts work so well. But check this out. If this is 50 cents, this is probably 50, $1, $1.50, $2, right? So 400 times $2, well, that's 400 shares. I apologize. So So if I have a 50-cent, let's take my risk reward again. So I am willing to risk $200 and it's a 50-cent move. I will buy 400 shares at $200. Well, 400 shares, let's say it's Ripple at 22 cents. And we know Ripple doesn't move $2. So let's use something more reasonable. Ethereum. Ethereum's a good one, but it's still expensive. Or another one that's really nice is Litecoin. Litecoin's great. So let's say Litecoin. I buy 400 shares of Litecoin. Or let's make it easier. Let's say you take I'm going to talk in Rand now, okay? So 2,000 Rand divided by 50 cents. Yeah, but it's not in Rand. Bitcoin's in dollars. So you just do the math, okay? So $200 that you want to go and risk at 50 cents. You can buy 400 shares, but 400 shares of Litecoin would be thousands. It wouldn't be just 400 bucks. Let me do it on the chart because this stuff is. So here's Litecoin, LTC, and you see it's at 168 right now. Funny, I was looking at it right at this point, and I actually was bullish here because I wasn't confident to buy it just based off this low, because there was just a lot of stuff going on with all the elections and everything. So right at this point, I was bullish. And then right here, it was like, okay, I'm just not going to look at it. I'll just stop out maybe like 200 bucks below. But it ended up going, and I pretty much got out around here. So I'm very conservative when it comes to day trading on cryptocurrency. But let's say, for instance, we're looking at this right now. You see, you can move these charts around. You can get really creative, like move it. You can like toggle around. You can change all that stuff. So it's pretty cool how you can work with this. But let's say, for instance, I'm looking at this. This is actually a great place to check it out. These candles all have meanings. You have to go check this out. This is called a doji. And a doji is not good. It indicates indecision, where it went high, but then it went super low, and then it just went to the middle. People were scared and greedy, so it was 50-50, and now it's just, okay, what do we do with that? But if it can break above 171, I will take 171, but then you can take the last candle if it's 171 and the low is 166. Then we will have 171 minus 166, $5 risk, a $5 risk. So let's say I only had like 3,000 Rand. You can buy one coin of Litecoin with a almost 80 Rand risk, but $5 risk. So then I would say, okay, cool. I will put a stop loss at 166, but I will buy at 171. And here's the thing. I have $200, or let's say you have $171 because you're buying one coin. 171 minus $5. So you stop out at 66. Now you know you're risking about 80 Rand. But I'm going to go back to my currency, okay? $200. I'm sorry, I just hit my mic. $200 that I'm willing to risk divided by $5. I trade with bigger size, so I take a lot more money and put it on the line because I would stop out. So I can buy 40 shares at 171. 171 times 40 shares. So it's going to cost me $6,840. I would stop out at 166. Oh my goodness, I keep doing that. 166 times see, now I'm confusing myself because I'm teaching on this stuff and I usually just do it. So 171 times 40 shares, and it's late, would be $6,840. But if I get 166 back at 40 shares, that's more like it. Then I lose about $200. You see how my risk is factored in now? So what does that mean? I need to make at least $10. So if 171 was my buy point, I would start selling at 181, because if I sell 181 at 40 shares, here's my $400 profit. So minus $400, that's how much I spend. So that's how I do risk and reward. But how you navigate around these things, you use your time frames. If you're working on a daily chart, 1 day chart, these moves will resolve over days. Very simple. When you look at a 6-hour chart, they will resolve over 6 hours. I like to actually use the daily chart and do 6-hour validations with my exponential moving averages, the ones that most people look at. In this case would be 12 and 26. And to get ahead of these moving averages, I look at patterns. So I'm going to take Ethereum because it's probably, yeah, perfect. So you see the bull flag right there. Right there, you see how it just goes, trends down, and then it just has that level of support. So what I would say is, at the level of support, if it breaks below 978, look at the right there, 978, I will stop out. So I set my stop loss as a sell limit at 90, let's say 90, at 91. It puts it in there, and I say sell my 40 shares of Ethereum. Well, that was now we're on Ethereum again, so Litecoin. But let's say on Ethereum I can't take that much because it's more expensive. So let's say 4 shares, okay? Sell my 4 coins at that stop out, but you're again, you need to be on Binance. That's more complex to do an actual stop order, because you can see if you say sell, you can go and say stop limit, and that's where you'll set your sell order, and then you'll put in your stop and all that. Go do another YouTube video to go, some homework. Go check out how to use Binance with stop orders. But just to get to the point of this video now, when you take the bull flag right here, how you work with the bull flag, you can do some more research on that. You would take the previous, you would buy at the last candle's previous high, setting your risk at the low of that candle. So you will buy at 1,049 and set your risk at 975. So I'm going to round it off, say 1,050 minus, what was the low of that? Let's say 979 or 980 minus 980. I'm risking $70. So if I only want to lose $200 and I want to risk $70, 200 divided by 70, I can buy 2.8 shares. And you know what the good news about crypto is? You can buy 2.8 shares. So that'll cost me about $900 to buy, or well, $2,700 to buy it. But this is the price you would sell it at. So let's say I put it here. So now I'm risking $70, right? So I'm risking $70, but I want to make a 2-to-1 profit. So let's say I want to make 2. Okay, then you'd have to make $140. But it's like, man, is this thing even going to move $140? There is 1,052. There's your $140. Right about there. Yep, so it did it. So you got a good 2-to-1. Now we know where cryptocurrency is going, right? It's just, we're on our way to the moon, in my opinion. So I would probably do a 5-to-1. If I'm risking $70, 5-to-1 would be, again, I want to make 350 for the what I call opportunity risk. The opportunity of not being able to get another great move because I have my money stuck in this one. There's an opportunity risk. So I want to get at least 5 times what I risked, which would be 5 times the difference between the top and the low of this candle. So the bull flag works like this. You buy at the last candle that it consolidates towards. This is a very dirty bull flag, however, because you see how it dropped right there. This thing can easily drop all the way to this. So you put a stop order in, but you put it in at the candle's previous high. That's the buy point. The sell point would be 5 times my profit. So even if it goes way more, I sold there. Take your profit when you get it. And then lastly, I also just wanted to mention on Coinbase, all these assets have what we call an address or a key. If you don't own the key to your coin, you don't own the coin. That is just simply what it is. If you only own the derivative, you don't own the coin. So if I go and I buy S&P because Tesla's in it, I don't own Tesla. I don't own the 500 companies. I own the derivative of it, the electronically traded fund, based on the price action of the accumulated 500 companies that they've listed under that index. So I hope that makes sense. But yeah, now let's check this out. I just wanted to conclude on this, and then I'll see if I missed anything on the questions. If you go on the daily chart, check this out, guys and girls. This thing, again, if you blow it out and you go back, you see this? There was a good bull flag. That would be the risk. It resolved. And then if it goes there, it didn't stop me out yet. So I just keep it. Didn't stop me out. It'll probably never stop you out until it crashes hard. But I have a profit loss. So if my risk is here and my profit is here, I take my profit. Now I come back in the morning like, oh man, it moved all the way to this point here. Well, then just don't trade the daily chart. Just trade the 1 minute chart. Because on the 1 minute chart, you'll also see opportunities. There's days when it's upward trending. This is a great bull flag. You can get like in 1, 2, 3, 4, 5, 6 minutes, you can get a great thing, or you can just hold more and it doesn't stop you out and it goes higher. And then at this point there, it would stop you out. So take your profit when you have it, right? And now you're like, okay, cool, I have my profit, I'm out. Here's another bull flag. Great, there's a bull flag. It didn't quite resolve, but it is a bull flag nevertheless. But now you can always say, well, man, yeah, and this is the highest it's been at this point, so this is obviously extended. But then you can just look at the moving averages to give you confirmation whether it's upward or downward trending. And at this point, you see what happened here? The 13 EMA went below the 20. Again, 13 went below the 20. So that's not good. You wouldn't buy it at that point. But if you know how to see the pattern, like, look, this is a bear flag. I wouldn't be comfortable to buy here because this could very well just go down. But once it comes back up, I'm like, okay, it's bullish again. Now I wait for another little resolution. And if it breaks the previous high of that, not quite a bear flag, but you can just put your risk reward ratios in and stop out if it doesn't resolve. But in this case, it did, right? And there you can see it, and it goes on. So just go look at patterns to conclude on that. The moving averages gives you a good indication whether it's going up or down. And what I'm actually thinking might happen here at the end, right now, it might retrace. And where it might retrace to, probably to this point right here. You see how that level got respected? There would probably an opportunity to get it back at 29,500. If on a hard news headline, that could probably very likely happen. And, that's where I would be. I'm actually going to get a tenth of a coin at that point. And then I'm just going to hold it until probably 40,000 because we are moving into the 40,000s. And yeah, that's just that. I don't want to bicker too much about this and just go on and on. Because this stuff can be a lot, but don't let it intimidate you or make you feel hopeless because this stuff it takes time, like anything. If it was easy, everyone would do it. Everyone would be super wealthy and just drive around in McLarens and be 16-year-old YouTubers. But no offense to them, they're awesome. But anyway, so like then I see things like the 21-day EMA. So now you're talking about 21-day EMA. That is something you would probably need Binance for, because that's more complex. Let's see. And again, there's videos and all this stuff. It is getting late, but so you just go and figure out how to jot down a moving average, and what you need to adjust in the settings of that moving average when you put it on, in order to get 22-day candles. So on the daily chart, you would have 21 days indicate a point in the moving average. So that's how you would do that. But there's more stuff that goes into this. You see this, the volume charts. That's also something that indicates, look at that nice little uptrend right there. You can see the volume increasing. And when you look at the float and you look at the volume and you look at all the outstanding float and the market cap, all that stuff indicates things. This is all statistics. So very good idea to have a profit loss ratio. And if you feel nervous when you're in a position, it means you have too much size. So what I love doing is going for the cheap ones. Like I said, like XRP, when it was still my favorite, I would just buy like at 11 cents. Actually, there was 11 cents not long ago. I would just buy like $500 worth of it, and then when it goes up 10 cents, that's a lot. So yeah, hope that makes sense, you all. And then let me see, what software to use. Okay, so this is the software I use, right? I use web-based applications and I use apps on my phone. So Coinbase wallet, and I sometimes trade on the wallet. But here's the cool thing about trading on the wallet. I don't technically buy on the wallet. I only do the courses on the wallet. So there's these free videos that you can watch, and they give you like $6 worth of XRP or whatever, or $50 worth of compound or $50 worth of maker. If this stuff goes 10x, it's $500, free money, because you watched a couple videos. They incentivize you to learn because they want you to learn. They want more educated people in the market, so it's less volatile, and that it can actually establish itself better. So again, I'll leave the link below for y'all, and you can go and join Coinbase if that's what you wish to do, and go watch the videos. Get some free cryptocurrency so you can feel like you're in the game. Feel like you're a part of it, and not have too much FOMO when these things run. Because to come back to what I mentioned on the message about trading psychology, it's very important to understand trade psychology, because that can actually bring a lot of childhood traumas back. Like if you had a childhood that maybe you had like a teacher tell you, you're not smart enough, and all of a sudden you have a big loss, that same traumas come back. So it really teaches you to become aware of it. It makes you face your demons. So trade psychology books. And there's a couple ones that I really like. Let me see if I can find it. Well, Trade Mindfully is one. Trade Mindfully is a great one. This one's good. But if you feel like that is too expensive, well, you can get the Kindle version, of course. But this one is great. I learned from Ross, and he's a great teacher. And this one's great. This one is absolutely great. It's giving you all the patterns. It shows you all the moving averages and everything you need to know. And the guy's awesome. He's a complete nerd. I usually laugh at him because he would just like make jokes that's not funny, but it's funny because his facial expressions is hilarious. But great book to read. You can actually go and see a preview, and it's a great book. I have a copy, a hard copy, and a electronic copy. So yeah, that one is you can actually get his book for free. Go on warriortrading.com and get his book for free. But this is going to be mostly just on chart patterns and mostly the stock market, but it's all pretty much the same. Yeah. And then, okay, so that's that on software. So you just see, you use all those charts. Yeah, this is how you use the charts that all the YouTubers have. This is it. This is where you do it. So go check up on level 2, the sentiment, and this is the actual market price, and this is the tape. Tape is very important because this can actually show you what is actually resolving. You see that the green flash? If I saw an actual pattern that's clean and it's showing up and the moving averages is right, and you see the volume right here down here, if I see the volume trending and the pattern isn't looking like this yet, it's maybe just a nice bull flag, and it starts picking up, this is where I go long. And then I would look at the tape to see when it flashes and the pattern is there and the moving averages are right with the volume that shows up right and the sentiment is bullish, I buy. So there's all those little things that goes hand in hand, and then obviously knowing how to work your order window. Like I said, small share size. If you feel like you don't know what you're doing yet, do 2 shares and just see, write down where you bought and sold and get your averages. If you see, oh, cool, I was actually accurate 55% of the time and I got a 2-to-1 profit loss. If you can do that 26 to 30 times or pretty much like that, that's a good data sample to know your metrics. So awesome. And then let me also, I just want to see also, guys in the space that you trust that we can follow. Very good question. Guys in the space that I trust that you can follow. Well, so I had the Winklevoss twins here. First of all, the reason why you'll see Bitcoin, for instance, it just keeps going, and it doesn't really go lower than, we're probably not going to see 10,000 again soon. I don't know. I just really don't think we would, because the Winklevoss twins, for instance, they bought Bitcoin at $8, and let's see how much. And the Winklevoss twins is actually the twins that started the whole Facebook idea, and Mark Zuckerberg was in their dorm, and they hired him, or kind of got him on board to finish the code because he was genius, and he just held out on them. If you watch the movie, this is the twins that sued him, and they made like 60 million or 30 million or something crazy like that on the settlement, and they just took their money, put it in Bitcoin, and they became billionaires doing that. So how much Bitcoin did Winklevoss twins buy? Cool. So they acquired $11 million worth of Bitcoin. That was the announcement that came out in April. Virtual currency hit a high of 266 and then plummeted. So yeah, you can read up on them. The Winklevoss twins, and they have an exchange called Gemini, but I believe it's just for Americans. But yeah, so they're whales, right? So they've got a lot of Bitcoin. I think there it is, $7 where they bought it. Go do research on them. Another person you can follow. I mean, yeah, it's hard, because when you say follow someone and you kind of just look at that person as the point of reference, sometimes these people have size that they hold and they want to make videos so that they can have people buy into that, and then it pumps. So it's very hard, because sometimes I watch videos and I see irregularities in it. So yeah, that's something that's kind of not so fun for me when I watch these videos. But you can go on, you you're welcome to go on Zen Trading on Facebook, where I have a page that I do a lot of posts on there, and I can do more videos too, and then put that on the Zen Trading YouTube channel, just like Zen Trading by Edwin Gaggiano. And you can also follow up more on that, because if I see people want to learn on this stuff, I can make more specific videos. But just go look up on moving averages, chart patterns, chart candles, line charts, the different options that people use when they make these. They just make line and candlesticks here, because that's the only ones that's really relevant. But yeah, that's pretty much what's up there. So yeah, I hope this was helpful. This was pretty long. I mean, this was a lot of your time. So I hope this helped. Again, YouTube has so many tutorial videos and everything. So it's a great resource when you go on there and you ask the right question. That's when you'll find the right stuff. So just to check here, I had bull flags. So go check out bull flags. Go read up on ABCD patterns. All an ABCD pattern is this. It's a bull flag that's a longer consolidation. Usually it looks like there's an A, B, C, and then when it breaks here, that's a long. Or this is just what they call um, a long consolidating bullish wedge, or a bull flag wedge. And you can see like some people even they get aggressive and they just buy it there. But I mean, you just have to make sure you buy it at the small candle and make sure your risk is established. You see this is an ABCD pattern right here, A, B, C, D. But then you get the inverse of it, which is an A, B, an A, B, C, D, descending triangles and ascending triangles, and all that stuff. And that all is very relevant, it really is. Something I like to use is so simple. When the trend line goes, if it's a backslash and it goes downwards, once it breaks through, it goes up. But if it's a forward slash and it goes up into that, this is what they call a channel, then when it breaks below that, it breaks down. And I've traded the S&P 500 like that pretty successfully. So yeah, that's that. And then I also wanted to just show you, go look up chart levels, because you can see these levels and you see how it just comes back and it respects it. Now there's resistance. So you will go and you look at that stuff. For instance, you'll see this is also very relevant to go check these things out, chart levels, because this will give you a nice place where you can feel confident. Okay, if this thing broke here, I'll just buy it here again, and then I'll probably sell it at this level. So these levels are great. You know, when you watch for that, you can see a lot of information. You see how it was supported, rejected, and it broke through new support, resistance. Now it resists, and then wants to break through, and it breaks down. And then usually when it's that weak, it's just going to break the previous support. Now that becomes resistance. So go check out the levels as well. This is what we call technical analysis. Okay, so a lot of people go and they do fundamental analysis, and on cryptocurrency, you don't really look at the company itself and their profits. You look more at the utility of the coin. So what is the coin utilized for? Cryptocurrency is more about the utility and then a very good CEO and what they've been involved with in the past. So Ripple was a great cryptocurrency, great coin for bank transactions, so the utility is great. And I still believe that it's probably going to redeem itself, because the banks want your cryptocurrency. They want your Ripple because they want to have most of it so they can do their business with it. And that's just how they bully people sometimes. But anyway, so yeah, and then that's pretty much it, so I hope that was helpful. I mean, I'm just kind of going with it, and this video was way longer than 30 minutes, so awesome, y'all. Yeah, happy times. Hope you have a good day, and God bless.